What is going on, traders? Welcome back to the Traveling Trader. Good to see you guys again. I do have some good news in this video, but this video is about 7 stocks that I'm looking to add to my portfolio. Obviously, we will be going over a brief market update. I'll also be giving you an update on some of the recent plays that we've had, and then I'll go over some trades regarding specifically these 7 stocks and how I'm going to be trading them going forward. But if you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know which one of these stocks you are trading, and let me know what you think of the options course. There you go. I let it out of the bag. The options course that I've been working on, I put in hundreds of hours in this thing, is now available. I will leave a link in the description as well as a link in the pinned comment. You can go and buy it right now. Initially, I had an early bird list, and if you were on that list, I gave you a 25% discount, but I'm opening up 500 new coupon codes for the early bird. So even if you're not on that list, you can still participate. There's only 500 of them left, and they expire on May 1st. In my view, it is the most comprehensive options course available. But as always, purchase is not necessary, and I appreciate your viewership nonetheless. Just subscribe to the channel and hit that notification bell. Without further ado, let's get right into it. So it looks like the Easter rally and April being the most bullish month to buy stocks, it looks like those two things are panning out perfectly. The S&P 500 is already up almost 3.5% just in the month of April, and we're only 11 days in. I did a whole video on why April is the best month historically ever, not just 2021, but ever to buy stocks in. I will link that video here if you're interested in my analysis, but it looks like it's panning out. In that video, I specifically also talked about retail stocks and why stocks like Amazon, Costco, and Walmart after Easter will likely see a monster rally. And Amazon is already up 7% since Easter. You see Costco up almost 4.5% since Easter. These two, based on history, were relatively easy plays. Over 20 years, Amazon has had a post-Easter rally every single year, to a varying degree, of course, but 7% is nothing to sneeze at. Now, as I said, the indices are at all-time highs. The S&P cracking 4128. This just looks absolutely bonkers. And in my last market crash video where I talked about buying the NASDAQ or buying NASDAQ stocks here at the 100-day moving average was an opportunity that you could not miss. And you could see the NASDAQ bouncing off the 100-day like a champ, heading to all-time highs. We just matched all-time highs last Friday. And in my view, it looks like we will break through this. We might see a bit of retracement first as we have in previous times. Every time we form this cup or rounding bottom shape at the high, we tend to see a pullback followed by a bounce creating newer highs. So we might see a pullback on the NASDAQ, a minor pullback. Then I think going into earnings season in May, we will break through all-time highs because all of the mega cap tech stocks have their earnings coming up in May. So if we do see a pullback here to the 50-day moving average or the 21 EMA, I think it is a buying opportunity for May if you're trying to play a short-term swing on mega cap tech stocks. But here at the 100-day moving average, we bought stocks like QQQ, which is the NASDAQ ETF. We bought Facebook, Apple. I mean, it was a pretty easy move. These are basically blue chip stocks that are at a major discount, and you want to pick them up for the long term any chance you can. We also bought Facebook and Apple leaps that are going absolutely nuts right now as the NASDAQ is testing all-time highs. We took profits on some. I also did a poor man's covered call, meaning selling a call higher than the leap. I go over all of that stuff in the options course, but I also did a video that you can find here on YouTube on leaps if you want to check it out. But yeah, all that is to say that the 100-day moving average on the NASDAQ was an opportune moment to buy. Even if we kept going down, I would have bought again at the 200-day moving average. So I'm not saying that we're clairvoyant and we predicted this amazing bounce, but you can't pass up that opportunity. If you're not going to buy there, then when are you going to establish a long-term position in blue chips? At the high? Nope. All right, and if you want access to all of our trades, link is in the description below, where I'm also doing a 10K challenge on Robinhood, which is going pretty swimmingly. Okay, on to the 7 stocks that I'm looking at right now. The first one, ticker symbol JMAI, a lot of you are familiar with this one, Jumia Technologies, which is the Amazon of Africa. Looking at Jumia, it tanked almost 55% after an offering, which is something that is music to my ears. I love seeing when companies that are hyped do offerings because it is a chance to enter if you haven't entered before, or a re-entry if you already took profits. We see here that it is back at the support level that we've seen time and time again, going all the way back to November 2020. There's bullish divergence here between the price and the RSI, as well as the MACD down here. The same divergence exists. Recently got a $70 price target from Citron, which is on everybody's shit list, to be honest, because they usually issue short reports, but in this case, they issued a long report on Jumia. But here's the thing that interests me at this price point. Jumia has a market cap of less than 4 billion. If you take a look at the market caps of the other Amazons, including Amazon itself, you could see here, I mean, nothing's gonna compare to Amazon, right? But it has a market cap of 1.56 trillion. Alibaba, 634 billion, it's in China. Obviously services a lot more people. Mercado Libre is 81 billion. And Jumia is here at under 4 billion. So there's a lot of upside, especially if you consider it to be the main delivery service in an emerging continent. So to me, as long as Jumia is above $30, which is basically this long time support here, I'm happy to stay in this position and will likely add more if we hit that $30 price point. I personally don't see it significantly falling below $30. The 200-day moving average is at around 27, which still for me is a holding level, but you get the picture. As long as it's around that $30 range, I'm happy to stay in Jumia for the long term. And this stock could easily double. It was already $70 not that long ago before the offering. All right, stock number 2, if you're a fan of this channel, you've heard me talk about this going all the way back to 2 years ago, is Disney. We've been in and out of Disney. I also have a very long-term position on Disney established. But since the pandemic, we've been buying Disney on the dips, and right now is no different. Disney is at the 50-day moving average, and I said that Disney is a stock that I would pick up on any weakness. It already hit $200 during the beginning of March, and Disneyland is looking to reopen at the end of April. You couple that with the insane numbers that Disney Plus has been doing, and I think that Disney has a mainstay case at the $200 level. It is one of these unique stocks that is both a reopening play as well as a stay-at-home play. All right, stock number 3 is TME, or Tencent Music Entertainment. This was a victim, sadly, of the Archegos blow up, but in my view, this was definitely an overreaction. Look at this drop here. Now, Tencent is trading just under $20. Tencent penetrates 88% of China's online music market. And if we take a look at the options data, look at this open interest here for May 2021. 10,000 new contracts here in 2021. You see at the $20 price point, there is 16,600 bullish contracts, and at the 23 price point, we have 21,000 contracts of open interest. And we're talking about a stock that's already profitable, was already at the $30 level, so there is a ton of upside here. Even if it just gets back to where it was, we're talking about an increase of over 66%. So definitely on my list, this drop was music to my ears. Now this is medium risk just because of the fact that it is a Chinese company and the China-US relations still are being ironed out. So I would set a stop limit here below the 300-day moving average, which is under $16.50. All right, stock number 4 is also risky, but one that could be extremely lucrative and could potentially see another double up, and that is Editas Medicine, or EDIT for short. EDIT is the ticker symbol. We have a few medical catalysts here. There's an early stage clinical study waiting to come out. It's outstanding, about a rare genetic eye disease. It also kicked off a phase 1/2 study of EDIT 301 in treating sickle cell disease. They're looking to file for FDA approval for the end of 2021 for this EDIT 301. So there are potential catalysts in the pipeline. Now, there are a lot of stocks that have potential catalysts, but they're not down over 55% and are sitting at the 300-day moving average. So at around $39, I like EDIT here. I still would set a stop limit at around the $33 range just in case things go south and it looks to retest previous lows. But at one point, ARK was super bullish on this stock as well. All right, stock number 5 is no surprise. It's AMD. AMD currently sitting at the 200-day moving average, waiting on the merger approval between it and Xilinx. There's been a ton of industry pushback regarding this merger, but if that $35 billion merger can cross the finish line, then we could see massive upside for AMD, especially with earnings coming out, I think around May 4th. In the not too distant future, I think AMD will be a $100 stock. It was not that far off just a little over a couple of months ago anyway. If you look at the options data for April 30th, you'll see that there are 5,000 open interest contracts at the $100 level. So a lot of options traders are pricing in a pretty big bullish move on AMD. All right, and stock number 6 is XLE, which is the energy sector of the S&P 500. Again, if you're a fan of this channel, you know that this is one of the sectors that was lagging for a long time. And when the market was continuing to make highs, XLE was still one of the sectors that was beaten down. And I was saying that if you guys want an excellent reopening opportunity on a sector of the market that hasn't yet recovered, XLE is it. And XLE over the course of 5 months is up almost 80%. Now there's still a lot more upside left to get back to pre-pandemic levels. And now that we are seeing some weakness in oil, retesting the 50-day moving average, I like XLE here, both for a swing as well as for a long-term position. And fans of this channel know that I also love MRO as well as Diamondback Energy, which will also see residual effects from a rise in XLE if and when it does rise. All right, and the last stock I'll talk about is actually a SPAC, surprise, surprise, and it is IPOE, another SPAC that we made a good amount of money on. Now IPOE is rumored to take SoFi public, and if that's the case, then you want to buy IPOE on any weakness. Right now, seeing a lot of consolidation here at the $17 range, going all the way back to the beginning of March. There's very little not to like about SoFi as a fintech disruptor. Their loan volumes are up, their adjusted net revenues are up, and they continue to improve on their earnings year over year. So the fact that we already saw IPOE at $28, I'm happy to buy IPOE at $17 pre-merger if it does in fact merge with SoFi. Now keep in mind that there is a risk that the merger doesn't go through. It does not mean that the merger with SoFi is already in the books, because it isn't until it actually happens and the ticker symbol changes. So keep that in mind. But at $17 in this consolidation range, I like holding it here unless we hear of the merger falling out, which I think is not very likely based on the news that's already out. All right, so those are the 7 stocks. I'll give you a little bit of a bonus what I'm looking to do on Monday. I see Google here looks overextended. Now I own a lot of Google, so I'm not bearish on the company per se, but just this move here, this melt up, looks overextended at the moment with an overbought RSI. Google or Alphabet obviously making all-time highs here, so I'll likely be buying a put spread, betting on a short-term move down. Now again, I own a lot of Google, so it's not like I'm bearish on it, but it doesn't mean that in the short term, I don't think that we will see a retracement back to reality after this melt up. If you want to learn how to do vertical spreads, again, check out the options course below, which is finally released. If you want access to all of my trades, link is also in the description below. Let me know in the comment section what you think of these stocks, which ones you hold or are planning to buy. Let me know what you think of the options course if you've already taken it. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.